Aurora, Protech, African Bank, Pinnacle Point, and there are hosts of others as well. What do they have in common? Well, they all collapsed except for African Bank, which received a bailout from South Africa's Reserve Bank. This is Tonight. I'm Bruce Whitfield. Tonight, I speak to Peter Mushangwe, who's the head of research at Legae Securities, and Oyebola Farinde, who is the head of corporate finance at AGH Capital, on whether a failed listed company should be bailed out at all, and if so, who should bail them out? Should we not have had the shareholders come up and help out African Bank rather than bail at the last minute? What's your view on African Bank? Because here we got, Peter, a situation where African Bank had some very, very substantial institutional shareholders. The news turned bad. Leon Kokinis left, and the shareholders ducked almost as quickly as they possibly could.
Yeah, I think, Bruce, the issue is who was bailed out. In my opinion, it's not the shareholders. In fact, probably after this bailout, the shareholders are likely to really get wiped off. Yeah. So the people who were bailed out are your depositors, and that's expected. It's a, it's a financial institutions. It has those social costs, but also I think aside from the depositors, you have other issues like employment. Your regulators want to sort of protect that. So for me, when it's a financial institution, when it's a bank, I think the issue bailing out is more straightforward than when it's a non-financial company.
But if it wasn't potentially systemic, we would have seen possibly the company being allowed to go to the wall. The mine workers at Aurora weren't granted the same privileges people who work in the call centre at African Bank, nor were the guys who poured the concrete at Protech. Those businesses are gone forever, so are those jobs. The Reserve Bank, however, steps into the breach in a financial services company to avoid contagion. They did the right thing, but it seems a little bit tough if you're a non-financial services player.
Well, I think, first of all, if we believe in free markets, or if we look at it from a free markets point of view, business failure is not a bad thing at all. It's not a bad thing. It's just like living and dying, basically. What we should be looking at, or what is really prime, is what cost it, what are the costs, and are there any innocent parties that would maybe suffer from the bailout? But the question I would also want to ask is, why is African Bank special? Why should it be bailed out? I don't think that should always be the case. Like you said, you want to find out if it's systemic, if there's going to be a contagion effect. In this case, I don't think so, because African Bank doesn't have so much of depositors' funds. It raises its funds from bonds, and these are investors.
But the consequence of that was my money market account is just that little bit smaller than it was a month ago, and I'm a bit annoyed by that.
Yes, and just like you would hold the bank to account, you would also maybe need to hold your money managers to account, because they sat down, they saw the risk return profile of investing in African Bank's bonds, and they took that leap to invest in it. So in a situation like African Bank, people I would probably want to hold to account, first of all, will be the management, first order management. There should be a market, very, very open markets, clear markets for business failure. Let it fail, because it probably tells you that the other business managers who are ready and also better able to manage those businesses.
Peter?
I think we agree that people should be responsible, but I think the uniqueness of the financial institutions is that they can diffuse the risk quite quickly. When there is an issue of contagion, there could have been some feedback risk, like you're saying, through your asset management firms. I mean, African Bank had liabilities of around 52 billion in bonds, another 8 billion in other deposits. So that's a bit meaningful. But I think more important to me is the fact that you have depositors, little as they may have been in the African Bank's case, but if you give depositors out there, no matter who they bank with, that in case of problems in the system, you do not sort of protect them, then you risk having a disintermediation in the system. And that's the key thing, that depositors do not invest, they seek payment system.
That's what it is. I mean, people don't see it as a risk-taking venture. They see it simply as a deposit.
Yes, it's important to have a form of guarantee on depositors' money, and that's where a deposit insurance should come in, whether it's implicit or explicit. But a situation in which you find companies going, not managing their businesses properly, and always having it behind the back of their mind that they'll get bailed out, in the case of the banks, I don't think is appropriate, because effectively...
But the banks operate in a regulated environment, though. So, I mean, if you're going to regulate the way I do my business, well, then you've got to provide some sort of backstop, don't you? Aurora wasn't regulated. We certainly didn't see the likes of Pinnacle or Protech being regulated. African Bank is a regulated business in a regulated environment. You restrict my ability to do business, therefore do you not owe me some kind of backstop?
Well, yes and no, because the first level of oversight and regulation should have come internally before we go to the secondary order position of the regulators, which is the South African Reserve Bank. So what the managers do, what did the board do to make sure that this business has been properly run? If they did not do that very well, if it wasn't properly done, let the free markets price them where they should be. Let them get taken out. Let other managers who can better manage the business come in, before we always have the secondary order input from the Reserve Bank.
Are you arguing that we didn't get intervention soon enough? Because on one hand, we want the free market to get rid of rubbish businesses. On the other hand, you seem to be suggesting that the regulator should have acted more quickly, should have been more proactive when it came to dealing with, for example, the poor provisioning strategies of African Bank. Perhaps
there should have been faster movement in action, faster action taken.
But then that's already the free market, though.
However, I'll take us back a step backwards, which is to say that the board and the shareholders should have held the board to account prior to that period where things went pear-shaped. I think that's what should have been done.
Peter, I mean, ultimately, though, we saw the consequence of the failure of African Bank. It came through almost immediately in the bond market. It had an impact on money market accounts, but it also had the impact of Moody's being the bad guys and saying, you know what, we don't like the potential impact this has got on the rest of the banking sector. We don't like the message this sends. You're a bit of a fan of the Moody's stance.
I am. I think the issue is we have really been sort of bashing Moody's about this downgrade, but we are not, aware of the methodology they use. I mean, lots of us, we do not really know how they consider it. So if in their methodology they consider, a systemic support, to say you get support from a regulator or a major shareholder or a government, and it did not come through, then they have all the reason to downgrade. But also I think we forget that, we all have methodologies on how we rate or rank things. If in their methodology they have a metric that probably allows them to downgrade banks in a system that is a bank that has failed. We have a bank that has failed, so accordingly they should downgrade the banks. So I think that those are key things that people are probably sort of overlooking. But also the fact is Moody's do not rate equities. Moody's rate bonds.
Yes.
And the bondholders, the junior bondholders have lost almost everything. Yeah. The seniors have taken a 10% haircut. So to me, it's there for everyone to see that, if this is the case, then you lose money. And Moody's is simply probably just indicating to bondholders, not equity holders, that this is the case.
So Moody's has had an unfair rap?
I would think so.
Okay. Do you agree with that, Oyebola?
No, I don't. I do agree that yes, they've been unfairly targeted. If you've done business and you've not done it properly, you would have to face the rating effects. What I think was not fair was the downgrade of Capitec Bank as well as the other South African banks. I think that was quite hasty. Because their business models are quite different.
They are quite different. But I mean, but Peter, you make the point that downgrade was adequate and it was fair and was the appropriate action to take.
Yeah, I think so. I think it is the appropriate action to take. The issue is we have a bank that has failed. So if in Moody's methodology, they consider that in a system that is a bank failure, you downgrade. That's it.
But the argument, and I think the point Oyebola is making is the system worked. I mean, so African Bank was allowed to go to the wall. Depositors were bailed out. Senior bondholders had a gentle shave. It wasn't too much of a severe haircut. And the system is allowed to continue to operate normally. And under that basis, it shows the system is sound.
The issue is the risk profile of the system prior African Bank's failure can't be the same as post. And if we agree that it cannot be the same, then we should agree that there could have been a downgrade.
Okay, but S&P and Fitch have decided to not downgrade. They're keeping a watching brief on that. Who will be seen to be wiser 12 months from now, Oyebola?
Well, it's time will tell. It's really difficult to
make a call. Make a call.
It's really difficult to say right now who will be correct, but there's really no contagion effects, in my opinion. The bank is not a systemic bank. It's not big enough to cause any real havoc in the market. So I think we'd rather watch and see over the next few months what will happen. Capitec Bank is very different from Abil in its deposits fund profile.
There we go.
Yes.
Will Moody's be seen to be vindicated in 12 months' time, Peter?
I do not think that their downgrade is meant to say, look, there's going to be some defaults or stuff like that. I think the issue is just to raise to the bondholders that this is the situation. If you do not, do your job properly and you buy some of these bonds, these are the risks that come through, and we have seen them coming through, in African Bank. Look, Bruce, I think, for example, the whole issue around even the bailout and the issue around the systematic effect from African Bank that we talk a lot about. I think again we miss one or two things. For example, okay, African Bank. The guys who were bailed out, in my opinion, are not shareholders. I do not see shareholders coming out with
they won't get a cent.
Post this recapitalization. The guys who were bailed out are your uninformed depositors, and of course the senior bondholders. And it's important that you provide that confidence in the system that if you are a senior bondholder, you get some protection. If you are uninformed, you get some protection. If you are a junior bondholder, of course, you should be punished, and that really goes on to reduce issues around moral hazard. You don't want all bank managers to think that we can do anything we want and get away with it.
And that point we will leave it. That was Peter Mushangwe, who's the head of research at Legae Securities, and Oyebola Farinde, who is the head of corporate finance at AGH Capital. Thanks to both of you for coming in and fueling the continued fires of African Bank. Emotions are very strong. I bumped into somebody who works at one of the big asset managers yesterday who's just lost weight, gone grayer, and keeps taking calls from people who've lost money. It's a big issue for people who did have exposure to African Bank bonds, and it's even bigger to little old ladies who don't have that much money left in the bank. Those are the big issues, of course, with which the big asset managers must deal now. There'll be more tonight, tomorrow. Till then, good night and goodbye.